Brings us to the markets. Global markets still on highs with positive news from a COVID-19 vaccine. And of course, again, that stimulus package in the US is also improving sentiment. The JSE followed. It's in the green. That's how it closed. Let's get more now from FNB market analyst Chantal Marx. Chantal, thanks very much indeed for talking to us. So let's start with the rand, moving below 15 rand to the US dollar today, of course, on the back of yesterday's GDP. It's still 1 rand weaker, though, as when we started 2020. But what is favourable about the rand being at this level at the moment?
Well, there are several positive things around the rand being at this level currently, and I think the chief thing is what it means for South Africa's fiscus. South Africa doesn't have a lot of dollar-denominated debt, but it does have some dollar-denominated debt, and if the rand is stronger, those interest payments are smaller in rand terms, and the principal amount is smaller as well. And this is very similar for big South African corporates who also have offshore debt. It also makes it a little bit cheaper for South Africans to import goods and services, and it makes it less likely that we will import inflation from other countries. Because if the rand is weak, these goods and services are more expensive, and the inflation prints that we see tend to move upwards.
Which brings us to my next question in a good segue here. The inflation released today, 3.2%. That's what it came in for November. But inflation on utilities, water and electricity, that's beginning to creep up, Chantal. But I would imagine that's not going to really play a role in interest rates, is it?
Yeah, I mean, so for now, inflation is very much under control. I take your point that administered cost increases remains a risk to the upside, but there really isn't much that these utilities can do in terms of increasing their rates anymore without having a severe impact on demand, and without the poorest of the poor basically suffering because of the fact that they are unable to keep their cost bases under control. So we would expect administered cost increases to continue. Also, food inflation appears to be moving upwards, but fuel inflation is still more or less under control, and some other administered cost increases like medical aids and insurance seems to be under a bit more control. Something like school fees, for example, hasn't moved up as vigorously as it would have in past years. So there is some reprieve for consumers at the moment. We don't expect inflation to move up by too much, and that is, of course, quite positive from an interest rate perspective. So because inflation is going to be under control, we could probably expect interest rates to remain lower for longer.
All right, so not much movement on the company front, but let me ask you, British American Tobacco was out with an interesting trading update today, saying its products were resilient through the lockdowns and bans were lifted earlier than expected. It's putting a positive spin on what it thinks the projections would be. What do you make of it?
Yes, so it actually expects a revenue for the year to the end of December to increase, and to increase by more than it initially guided for, or towards the upper end of a range that they initially guided for. What's very important to remember about British American Tobacco in the South African context is even though South Africans weren't allowed to buy cigarettes for several months, this was not the case overseas, and British American Tobacco is a multinational company, and South Africa is a very small contributor to it, and this is reflected in these numbers. What they also said was that some of their kind of newer generation technologies, or new categories as they refer to it, is going to be under pressure, and that would be expected because people, I think, not really having the headroom to try anything new, or being in the headspace to reduce to move to reduced harm products globally. So that's a bit of a detractor, and Forex is a bit of a detractor, but overall the update was positively received by the market just because revenue is going to be up by more than expected.
And just finally, before I let you go, we also had a trading update from Sanlam today, didn't we? What did that look like?
Yes, that was a 10-month trading update to the end of October, and it also looked pretty solid. I mean, Sanlam has been under a lot of pressure so far this year. When COVID-19 first hit, they decided to get together a big COVID-19 provision or pot in case their claims would go up by quite a bit. But what then happens is these companies have to put it through their income statements, and that does affect their profitability. But what's really positive about this update is that Sanlam has not yet had to touch that pot or that savings pot that it put aside for COVID-19. And if you exclude COVID-19 from the operational result, they actually had a pretty good net result from financial services, which is the best measure of profitability. It would have been up 22% had it not been for these COVID-19 impacts, which tells us that the business is very healthy from an underlying perspective.
Right, very interesting indeed. Chantal Marx, FNB market watcher there. Thanks very much indeed for talking to